Everyone loves to hate China. They call them communists, exploitation artists, and enemies of the world. Yet China is the second largest economy in the world, valued at close to $18 trillion, only behind the United States of America. And guess what? As per Statista, it has the highest number of billionaires in the world at a staggering 814 billionaires, leaving behind USA, which is at 800. Now, we are not here to go and judge another country's social constructs or culture. We're only interested in the money, and from the looks of it, China has a lot of it. But where is all this wealth coming from? That's exactly what we're going to try and figure out today. Chapter 1. A story of growth. Ever since China began to open up and reform its economy in 1978, the country's GDP growth has averaged over 9% a year, and almost 800 million people have lifted themselves out of poverty since then. For context, after China and India, the country with the highest population is USA, with close to 350 million people. So more than double of America's total population has been able to cross the poverty line in China in under 50 years. There have also been significant improvements in access to health, education, and other services over the same period, as one would expect with increased wealth and funding. After the latest assessments, China is now considered to be an upper middle-income country. Although China claims to have eradicated extreme poverty in 2020, an estimated 17.2% of the population lived on less than $6.85 a day, as per 2017's purchasing power parity terms. This amount is the World Bank's upper middle-income country poverty line in 2023. At the same time, China has become the world's largest economy on a purchasing power parity basis, manufacturer, merchandise trader, and holder of foreign exchange reserves. China's strong growth has been based on investment and heavy manufacturing focusing solely on exports, which is an approach that has largely reached its limits and has led to economic, social, and environmental imbalances. Reducing these imbalances will require a shift from manufacturing to high-value services, from investment to consumption, and from high to low carbon intensity. Of course, the Chinese officials know this a lot better than us, which is why the country has been making rapid strides in their course correction. China has become so influential now that global environmental problems cannot be solved without their engagement. Given its size, China is central to many regional and global development issues. Although not the main source of historical cumulative emissions, China today accounts for nearly a third of annual global carbon dioxide and 30% of the world's greenhouse gas emissions, with per capita emissions now surpassing those of the European Union and on par with the Organization for Economic Colorado Operation and Development average. On top of that, its air and water pollution affects other countries as well. China's growing economy is also an important source of global demand, which has not really slowed down regardless of public perception from the outside world. Its ongoing economic rebalancing is stated to create new opportunities for manufacturing exporters, though it may reduce demand for commodities over the medium term. Chapter 2. Key drivers. Now that we've spoken about China's story of growth, we should also take a look at what its key sectors are when it comes to raking up the moolah. As per Investopedia, there are 3 key drivers for China's economy. First up, we have the services sector. Yes, you heard that correctly, China has a ridiculously successful service sector. As a matter of fact, the country's services sector represented more than 54% of the economic output in 2023. By contrast, the services industry represented slightly more than 46% of GDP in 2013. In 2020 alone, China exported $208 billion worth of services, with the top services being other business services, transportation, computer and information services, construction services, and travel. The service sector also includes storage, shipping, the wholesale and retail trades, hotel and catering services, financial services, and real estate, among others. By the end of 2023, the services sector accounted for roughly 55% of China's overall GDP, which was 126 trillion yuan, or $17.7 trillion. So, how does such a sector flourish in a country like China? As you'd expect, the overall consumption of goods is a major factor and driver of growth and continues to help boost the country's economy. After all, where there are products, there are services, and that's where the cash comes in. China reported a whopping $6.63 trillion in 2023 from this sector, which is an increase of 7.2% in just 1 year. Moving on, China's retail sales increased by 10.1% between November 2022 and November 2023. Retail sales represent consumer spending within the economy. As a comparison, retail sales in the United States showed an increase of just over 4% within that same period. A healthy services sector is a sign of healthy domestic consumption. It also indicates an increase in per capita wealth, which gives the Chinese people the capacity to afford their own output. It is to be noted, though, that despite its rapid gains, China's services sector accounts for a much lower share of GDP than services in the US, which amounted to nearly 78% of US GDP in 2018. The second driver is manufacturing and anything industrial. China's manufacturing and industrial sector represented over 38% of China's GDP in 2023. However, China's industrial production has been on the decline in recent years, coming in at 4.5% in March 2024, so that is an area that could use some extra work. Actually, China's manufacturing sector has also been declining as a percentage of GDP. In 2013, manufacturing and industry accounted for 44.2% of China's GDP. So what on earth could be causing this deduction in what was once the powerhouse of this country? As per Investopedia, the decline is likely due to China transitioning towards a domestically driven consumer spending economy. Chinese goods within the manufacturing and industry sector include iron, steel, aluminum, textiles, cement, chemicals, toys, electronics, rail cars, ships, aircraft, and many other products. As we all know, these products have massive export volumes which had placed the industry at an unachievable standard, so the decline could also be looked at as a form of stabilization and plateau for the economy. Now, China exports a whole lot of goods globally, including to the US. The top exported goods for China at the end of 2022 were electronic goods, computers, and machinery, none of which should come as a surprise. Considering the economics of production, assembly, and shipping costs, China also has a thriving automobile manufacturing industry and is the world's largest car manufacturer. The country produced more than 30.1 million vehicles in 2023. This is in comparison to a meager 10.6 million produced in the US. Japan was the third largest producer with about 9 million, followed by India with about 5.9 million units produced in 2023. As you can see, the gap is rather large. Overall, the sector was worth close to $5 trillion as of 2022. China has somehow built a rather villainous reputation of itself due to media circulations of unfair labor rules and corruption when it comes to honoring the bare minimum to its workers. Keeping all of that in mind, it still comes across as a rather surprising statistic that the country is still leading the way despite the negative PR. The third and final key driver is none other than agriculture, which is somewhat expected of Asian countries due to high fertility rates. Agriculture is the third largest sector in China, representing 7.1% of the country's total output as measured by GDP as of the end of 2023. Truth be told, the share of GDP is down from 8.9% in 2013, which means it is not exactly on the uptick. Although the percentage is not as high as emerging market economies in Africa, it is still placed better than the 5.6% share of USA GDP in 2023. Now, China produces many agricultural goods including corn, rice, wheat, soy, cotton, peanuts, and apples. China also produces 69% of the world's nectarines and peaches, while it's the leader in peanut, rice, and wheat production as of 2020. Now, I'm aware that is not a key driver, but this sector is actually one of the growing industries in China, so it does deserve a shout-out. It's none other than the Chinese pharmaceutical industry, which is growing at an extremely fast pace. China's drug distribution system is multi-phased, which means that drugs pass through various tiers and expensive middle people before arriving at hospitals and pharmacies. This industry has also been plagued by criticisms of IP theft, which is an accusation that the country is no stranger to, especially because of its impressive ability to reverse engineer any product that comes its way. As far as structure is concerned, domestic firms comprise the majority of the market, but international companies like Pfizer, GlaxoSmithKline, Novartis, and AstraZeneca also have a strong presence, with China reforming and regulating the pharmaceutical industry, including by increasing OTC access and enforcing patents. There is a high potential for investment growth in this area. Chapter 3. Challenges. While China's growth seemed unstoppable at one point, there are obvious cracks in the economy that have slowed it down. First off, the country is under fire for the amount of non-renewable resources it burns through each year. With China already considered a large polluter and emitter of greenhouse gases, the expected increase in coal usage is troubling to some. Next, China is home to rampant corruption. The national government is actively trying to stamp it out in an effort to make the country more business-friendly for Westerners, and to avoid the economic and business inefficiencies that come from corruption. Finally, there's the problem of underemployment and inflation in China. Chinese farmers on small plots of land are marginally useful and in an efficient market would be unemployed. Although inflation in June 2022 was a manageable 2.5%, the last 20 years have seen the inflation rate vary wildly, a concern for businesses wanting to invest in the country. Of particular concern was the consumer sector, with retail sales growth grinding to an 18-month low as deflationary pressures forced businesses to slash prices on everything from cars to food to clothes. Lin Song, chief economist for Greater China at Ing, made a comment stating overall, "The disappointing GDP data shows that the road to hitting the 5% growth target remains challenging." He further added to this, by saying a negative wealth effect from falling property and stock prices, as well as low wage growth amid various industries. Cost-cutting is dragging consumption and causing a pivot from big-ticket purchases toward the basic eat, drink, and play-themed consumption. Among those under pressure was Swatch Group, the world's biggest watchmaker, which reported a steep drop in sales and earnings amid weak demand in China. The years-long property crisis deepened in June as new home prices fell at the fastest pace in 9 years, battering consumer confidence and constraining debt-laden local governments' ability to generate fresh funds through land sales. The government is aiming for economic growth of around 5.0% for 2024, which is a target that many analysts believe is ambitious and may require more stimulus. The sharper-than-expected growth slowdown in the second quarter prompted Goldman Sachs to lower its forecast for China's 2024 growth to 4.9% from 5.0%. As a matter of fact, a team of Goldman Sachs economists, led by Lixing Wang, declared, to counteract weak domestic demand, we believe more policy easing is necessary through the remainder of this year, especially on the fiscal and housing fronts. To counter soft domestic demand and a property crisis, China has boosted infrastructure investment and plowed funds into high-tech manufacturing. China's yuan and stocks fell following the disappointing data, but share markets later closed higher as investors bet on more stimulus. But how did this come about in the first place? In recent years, China's growth has moderated in the face of structural constraints, including declining labor force growth, diminishing returns on investments, and slowing productivity growth. The challenge going forward is to find new drivers of growth while addressing the social and environmental legacies of China's previous development path. The role of the state also needs to continue to evolve, focusing on providing a clear, fair, and stable business environment, strengthening the regulatory system and the rule of law to further support the market system, as well as ensuring equitable access to public services to all citizens. Of course, there are a lot of other forces at work over here as well. China is a growing influence on other developing economies through trade, investment, and ideas. Many of the complex development challenges that China faces are relevant to other countries, including transitioning to a new growth model, rapid aging, building a cost-effective health system, and promoting a lower carbon energy path. Following a moderate post-pandemic growth of 5.2% in 2023, projected growth rate of 2024 is not something to brag about. Domestic demand in China has remained sluggish and contributed to low inflation, while the policy space for stimulus is constrained. Weak business confidence, in part driven by the property market downturn, continues to weigh on growth as well. Over the medium term, China's economy is expected to undergo a structural slowdown. Potential growth has been on a declining trend, reflecting adverse demographics, tepid productivity growth, and rising constraints to a debt-fueled, investment-driven growth model. Structural reforms are needed to reinvigorate the shift to more balanced, high-quality growth. Chapter 4. Conclusion. No matter how you look at it, everything boils down to the bottom line. China has the first or second largest economy in the world, depending on whether you're looking at purchasing power parity or gross domestic product, respectively. Either way, it enjoys a rather comfortable position in the world despite its reputation in the minds of the media. Industrial production and manufacturing exports are major forces driving the economy. However, perhaps significantly, the country is not nearly as developed as other countries in the top 10. Government spending is a key driver of growth that has led to indiscriminate construction over the last few years. Even with the largest population on Earth, China has struggled to find buyers for real estate in its ghost towns. But the government's latest agenda focuses on stimulus to reinvigorate economic activity. And if that plays out, the country may still have significant room to grow. So, all is definitely not lost for China, and if things play out the way they want it to, then we could be looking at China becoming a force that even the other countries combined will not be able to counter in the future. If you like today's topic, then please like, share, and subscribe so that I can continue to make more videos. Let me know in the comments if you'd like me to cover something you find interesting. Okay then, I'll see you in the next one.